Hey guys, Alchemist here. So I hope you've all had an incredible week. We had our backtesting session yesterday with the community, and I'm going to show you a few trades that we highlighted that were available on Monday that's just passed, and how you could have got involved too. Last weekend, I actually put up a whole 1 hour plus webinar of what we actually go through with the community. We have 2 of those per week, along with all the outlooks and everything, of course, daily on Discord, as well as having the availability to DM me at any time and getting a response within 24 hours. So we'll go through some of the available trades that of the week that's just passed. And what we'll do is we'll just replay the last week there. On the weekly time frame, if you are new to this channel, the only things I do mark out on the weekly are just the current supply and demand zones that we're trading within. So this here is our weekly demand. And in terms of our weekly supply, it's this candle up here. Perfect. So that's all we need to do on the weekly time frame, and then we can go down to the daily. In terms of our daily, we had our daily break of structure here after the price gave us a bearish pullback greater than 110 pips, and then we had a body close above. If you haven't yet watched my video on how to mark out structure and the structural breaks, I'll also link that in the video above here, so you can go ahead and watch that after you finish this video. So this here is the daily break of structure. To identify the daily low, it's simply just the lowest point below that daily break of structure line. Okay, and then our daily high is after we have a bearish pullback of 110 pips or more. So this one here, from this high of this candle to the bottom of this wick, was only 102 pips, and then price retraced back above. So the daily high was only actually confirmed after this high retraced greater than 110 pips. So this here is our daily high. Perfect. And on the daily, now we have done all that we need to do, so we can go down to the 4-hour time frame. On the 4-hour, the break of structure was the same as the daily break of structure. So this will be the daily plus 4-hour boss. The 4-hour high, however, was this one here, because we did have that bearish pullback I showed you on the daily of 102.7 pips. So at the time, this here solidified our 4-hour high. And this sweep here, we're not super interested in terms of changing where our 4-hour high is, because we need to see a body close to confirm that new break of structure. So this here is our 4-hour high. 4-hour high, perfect. And the daily low is also the 4-hour low. So this is daily plus 4H low. Perfect. So now we have our daily high and our daily low, as well as our 4-hour high and low. So let's drop a premium and discount on our 4-hour range. So that's just from here to here, not all the way up the top here, because that's actually our daily high. And let's identify some POIs within this range. So the easiest ones to do straight away are going to be our extremes. So this here is our extreme demand within our 4-hour range. And this here is our extreme supply. We can also highlight that this supply here has swept liquidity. So we'll mark out the sweep there. And then let's dissect this piece of price action too, just to identify all the other valid POIs. This larger box here, this was the weekly supply. I'm just going to minimize it just so that it's a bit more clear. So we can see that we've tapped into it here once, then we've swept it again, and we've had quite a bearish reaction after doing so. Another thing we really focused on this week in the webinar was just to understand the higher time frame narrative, and to look all the way from the weekly down to the 1 minute to sort of understand what price's intentions are and how best to frame up our trade ideas. So what we'll do now is, within this range too, we can also see that here we have an unmitigated portion of this wick as a supply. And when price interacts with it here, we are left with these buy to sell wicks, which are a demand zone because they did create a higher high. And then this demand here failed. Okay, so the demand failed when we had this body close below, and then we had signs of supply holding. So we can see here as well, this was the supply. We didn't actually get a body close above this supply. We just actually swept above this one too. So we can mark another sweep here. Cool. And then in terms of demands, so we can see we actually had a demand chain forming at this point too. So we have this as well as a supply. When price interacts with it, we have this candle here as a demand zone, which was mitigated here. Didn't quite tap into it here, but we can see here what we actually did tap into, and I believe we swept was this candle. We did. So we swept this 4-hour demand. And this 4-hour demand was after we had interaction with this supply, which mitigated this supply. Okay, so at this point here, we had supply holding, and then this supply here setting a lower low. Price interacts with that supply, tries to set a lower low, but fails, and demand takes control, interacts back with the supply. Again, supply tries to set another lower low, fails, and essentially demand takes control and breaks above, resulting in our daily plus 4-hour break of structure. So when price arrived at this point, the idea was that if the daily and the 4-hour are both bullish, that we should be coming back into discount of that range, ideally into the first sort of demand zone here, which makes sense. And we also see this sweep. So we would have liked to see after this sweep, a large injection of orders to be taking out the current daily and 4-hour high to continue the bullish order flow expectation. But as we're about to see, that did not exactly occur. So we have this here, and then we have these very minor buy to sell wicks. Okay, there we go. And we also have these buy to sell wicks, which are a bit more significant too. Again, which have interacted with this as a demand. We could take the whole candle, but we can see here that as price pushed down into this demand zone, we have the lower wick signifying that price absorbs the orders from here. The absorption of orders pushes price above here, and then essentially supply holds, setting that new lower low. Now, if we look at this piece of price action here, we also have this as a supply zone. We have this as a demand. We could take the inside bar. You could also take the upper portion of this wick. Okay, and then we have this as well, which was mitigated here. So we could just take the unmitigated portion of this. Beautiful. So they're the significant POIs that we really need to be marking up at this point. And what we were looking at here is price has now come into a supply zone, which is in premium. And the other thing we were looking at and discussing within the community is momentum. So if we look at how fast price has come down, especially through this bearish candle here, as opposed to the corrective nature of price trying to push back up, we can really see that the actual imbalance, which is this here is imbalance with the fair value gap, that is an imbalance of sell to buy orders, meaning there are a lot more sell orders at this point pushing price down. And as buy orders were accumulated on the way back up, they were accumulated over a much longer time and of lower significance too. So if we compare to where price is right now, so here, and we look at how long it took price to, if we look at how long it took price to get down to its lowest point, okay, the lowest point being here, this was 1 day and 20 hours. And then if we look at how long it took price to come back, it was almost twice as long. Okay. And we can also see that the impulsive moves weren't really there in terms of the bullish return, as opposed to how bearishly we had come down to that zone. So the other thing we had here is that we had this demand zone, which had swept liquidity. Okay. Perfect. That's all that we needed to do on the 4-hour time frame, and then we'll go down to the 15-minute. So the 15-minute break of structure at the time was this one. Meaning the lowest point below there is the 15-minute low. And the highest point after having a bearish pullback of at least 22 pips is the 15-minute high. So we can mark out our 15-minute range here as well, from this high to this low, this high there, cool. And let's now identify POIs within this range. So again, we can take the extreme, which is this very, very large wick. We can just take the unmitigated portion of it. So this here is that demand zone. We have this as the supply zone. Okay, we also had this here as a supply. And then when price has interacted with it, we've created these buy to sell wicks, which were the flip that actually flipped that supply and led to the 15-minute breakup structure. So this here is a demand zone. So I'll just mark this out for you. So this here, this was a supply. Once we set a lower low, price interacts with it, comes down, leaves a very nice flip zone here, pushes back up again. We see the absorption of orders through the indication of this lower portion of the wick, and then price does break above. As price returns to this region, we see interaction with this demand, and then price, the demand here tries to hold, pushing price above here, and then essentially we start to see those early signs of demand failing as we did not set another higher high. So we can identify this one here as a supply zone 2 after it set a lower low. And the lower low that it set is just this one here. So once this candle broke below, we had set a lower low than the previous low. Therefore, this is a supply zone. And now in terms of order flow, we were actually still bullish in terms of order flow as well when we had taken this high. So for price to turn bearish, we'd have to wait to see this low close below. So this would be where our chalk down would be. Okay, we can also identify this as a very nice demand zone. So this is the first demand zone within discount. So ideally, if price were to remain bullish, we'd love to start taking longs from here. So as per the flowcharts and as per the trading strategy we've created here at Millennium Wealth Group, we cannot be taking a short from this supply whilst order flow is still bullish. Okay, so the only two places we could take a short is if we had a bearish change of character below, or if it's from the extreme. Price, as we're about to see, doesn't come to the extreme, and there are no longs to be taken until we tap into this zone here. So once we've tapped into this demand, we can go straight down to the 1 minute. And then we had one of our liquidation models occur, which I'm not going to be going into too much detail, on this video. So we'll see this here. We didn't quite get so after we had all of this price action here be swept, we were looking for price to give us a 1 minute change of character above. Okay, so currently if we're looking for a chalk, it would be from here to here and from here to here. Okay, once we set a new lower low again, we'd now be looking for it from here to here and from here to there. Perfect. Now what we can see here as well is this line is actually representing where we would have chalked down into turn price bearish. Okay, but we have also now tapped into the extreme demand, and we've swept this whole POI. So I'm going to mark out this sweep. So we have this here as a sweep. Okay, and we're waiting for price to give us that bullish chalk. And personally, I need to see a body close. So now once we've set a new lower low here, we'd need to see this high fail. Okay. Haven't yet had a body close. Okay. And we've now just set a new lower low. So now we've tapped into this and we've swept the first tap, and then the chalk we'd be looking to see would be up here because this was the last point of supply. So this would be our chalk up. This would be our LQ. Now I just want to quickly go back out to the 15-minute. So what we can see here is now we've actually had a body close below, meaning price has turned bearish in terms of order flow on the 15-minute. However, it is still bullish in terms of structure. So this is really the piece of how does order flow and structure go in hand to allow us to actually be taking trades. And it's something I think a lot of people struggle with, and I do get a lot of questions about this. A few people have booked one-on-one consultations to go through this concept with me, and it's something we've really mastered here at Millennium Wealth Group. So even though we have turned bearish in terms of order flow on the 15-minute, because our 4-hour structure is bullish and because our 15-minute structure is bullish, we are still able to take longs. All it means is we need to just have realistic targets. So we have this here as a supply zone, which is the flip of this demand. Okay, so we just need to keep this in mind in terms of the 15-minute. Now, if we go back down to the 1 minute, We've had sufficient liquidation occur. We're now waiting for the change of character to have our 1 minute order flow realign bullish to allow us to take longs. And we get that there when we have this body close. So what we can do now at this point is set a limit on 25% of this POI, being the extreme. Okay. And if I'm taking a long from here, I'll want to cover the lowest point being this one here by 0.3 of a pip. And that's something as well that we went over in the webinar, which I uploaded last week. So if you haven't yet watched that, there's so many gems in there. I really should not have been given all away. Sorry, I should not have been giving all that information away for free, but I was feeling generous. Okay. So this here, the lowest point is 574. So if we just look up here at L, the lowest point is 574. So I want to put my stop loss at 571. And then I can have this here as 2.6 pips. I usually use a 2.5 pip, but this here, 25% of this, and making sure that I'm covering the low with 0.3 just means that I need to have 2.6 pips, which is not too much of an issue at all. And then as price comes to this zone, okay, we can see we're here now tagged in. And in terms of where we'd be targeting, so this here, this is that 15-minute flip that I showed you before, which is actually an inside bar. And what we can see here is we have this very nice candle here. If we were to refine the 15-minute range, which is also swept liquidity. Cool. So what the members and I were doing was targeting that, and it gave us an R to R of 5. Okay, so we're just targeting there. So we can see here we're tagged in. Does get pretty close. Okay. And then we see the nice push up. This trade did not take too long at all. If we just press play. I think that would have tapped our take profit. Not just yet. A couple more candles. There we go. So that was 5R there, secured within, how long was this trade here? 2 hours and 6 minutes. And this was the Asian session open in Sydney is at 12, and this is at 12:49. So this is just under an hour after the Asian session has opened. Okay. So there's 5R secured there. Now, once we've now interacted with this, let's have a look at our 15-minute. So what can we see here? We're now within this supply. So we really want to see if this supply is going to show us if the supply is going to continue to hold and set another lower low, or if price was to remain bullish. Now, in terms of our order flow now, we have actually had a bullish chalk up. So this here is the liquidation or the liquidity grab part of the chalk. And then here is the chalk up. So I'm going to remove, that's just the 1 minute chalk from the entry, but this here is that 15-minute chalk. I might just write 15M. Okay, and we know that we're in this supply zone. So now we can identify this here as a very nice demand as a flip to allow us to be taking continuation longs from if we see the supply fail. Now, what do I mean by that? So this here is that supply, and what I'd want to see is price closing above with a body close just to confirm that this supply has now failed. So if we play one more 15-minute candle across, you can see here, now this supply has failed. There are also these buy to sell wicks here. Okay. However, there was no opportunity to enter long from here. We have tried, but there was nothing that suited our entry model at this point. So let's have a look at the lower demand here. So now that once this supply has failed, where's our next unmitigated supply zone? Well, we have these buy to sell wicks, but if we look to the left, it doesn't have any interaction. And if you've seen any of my videos, you'll see that I harp on about interaction being the most important thing. So if that one is not valid because it did not satisfy the interaction requirement, this one above here is valid because we had interacted with these buy to sell wicks. So we have these buy to sell wicks here. And then we flipped this demand, and this is where supplier took control. So if we do have an opportunity to frame up a long, it would be until this zone above, unless within the way back down, we create a new supply zone. So what we'll need to do now is I will only ever take a trade, as well as any of the members, after a 15-minute POI has been mitigated. So we have this 15-minute POI or this 15-minute POI. Until that point, we're not really interested in price. We've set alerts and we're going off to do other things with our life. So we see here price sort of stopped really close to this and had some inducement, but again, it just did not give us an opportunity to enter at this point. And then as price returns down to this POI, we can have a look at the 1 minute. And what can we see here, right? So we had a refined zone above here, which is what tapped into it. Yeah, we can see that price tagged this 1 minute refined zone. And if we were just to remove this for a second, we could see this price action here as inducement for that 15-minute POI. Why that's important is there's a series of 6 liquidation models which I've created for the community, which if we don't have one of those 6 occur, we do not take a trade. Okay? So that is, we need to see one of those occur, and then we need to see our 1 minute change of character, and then we can look to start framing up a trade. Now, before we go any further, what we want to see now is, have we created a new supply zone? So when we identified these buy to sell wicks, this was the last lower high that created a higher high. So once price closed below, or even just wicked below, we have now created a new supply zone in this candle all the way above here. So now if we are going to be framing up along, we need to be targeting somewhere within this supply zone when we can refine it down on the 1 minute. So if we go back down to the 1 minute, currently where we'd need to see a 1 minute change of character would be here. Sorry, no, these didn't actually trade any higher. So it was all the way here. So inside bars, we do use them on the 15 minute, but not on the 1 minute. So we'd need to see the above here close. So let me just mark it out correctly. That would be our chalk up. And this here would be that last point of supply. So I'll just mark it out for you. This here would be that last point of supply that created this lower low. So we need to see that fail before we look to take a long. Okay, so now we have seen that fail here. And if I just minimize this so it's not in the way. Now let's identify all of this. So what do we have? We have very, very minor buy to sell wicks here. We have this very nice POI. We have this one. Okay. The important thing to note about this one here is it actually set equals. So the low of this one is 651 and the low of this one is 651. So when we have this, we can look at these as potential liquidity for the lower zone below it. So of course we have the extreme. It was mitigated there, so you can just minimize that portion and you can just cover that low too. All right. So now when we're with a situation like this, where we have multiple different flips to be entering from, we need to be cautious as to which ones we take and how many of them we take. Another thing we really go through in the course is risk management and trade management. So what we do is we identify how much we want to risk per day. We identify how many sessions we want to trade. We identify how many opportunities we want to take per session, which essentially will lead us to how many bullets we have for the day or how many opportunities we're going to be entering the market and what level of risk we should be taking. Personally, I'm not going to get into the specifics of how I do it and the community does it. If you're interested, you can join the course. However, that would mean that this one would not be a really nice place to take it. We could use this and then we could have one saved for the extreme as well. Now, if we are looking to enter off of this candle here, it was extremely small in terms of its pippage. So if we have a look at it, it was like around 1 pip. Yeah, it was really, really small. But what I was looking at is, if we look at this here, this was a higher high, higher than this high. Then we had a higher low, higher high, higher low. Then we have this here is a higher high, higher low, higher high, higher low, and then a higher high. So this was up below this one. The last structural point was here. So what I wanted to do was, because this flip in particular did not sweep liquidity, it in itself could be swept. Now, liquidity sweeping and all that kind of stuff is also something that catches out a lot of people. So I have created a lecture about that, which you can go onto the channel and have a look at. And if you are interested, you can join the course and you have a full breakdown of how to deal with it and all the flowcharts as to what to do in each situation. Essentially, what I wanted to do was cover the low of this week by 0.3 pips. So the low here is 677. So -3 is 674. So I wanted to do there. And then because this was just 1.6 pips, I wanted to give it just a bit more breathing room and allow a 2 pip stop loss to be entering from there. Now, as we saw before, we have created a new 15-minute supply zone. And what we can see here is we have this very nice engulfed POI, which was also a flip, which would be a very nice and realistic target to be targeting if we were to be able to get into a long at this point here. So now let's see if price does return to tap us into the trade. So what we can see here is we've now just set inducement just under a pip away from our POI. Just want to minimize this one here. And at this point, we would have been tagged into the trade. Even if you had some spreads, you'll see price will give you another opportunity there, and you'll definitely now be tagged into the trade. In terms of our take profit, again, we'll just be targeting 5R within this engulfed POI that we have here. And this was a Frankfurt open. So this is exactly 6 p.m., which is exactly when Frankfurt banks open. And as you can see, this one was a very nice and very quick trade. So there we go. Full TP hit, another 5R in the span of 31 minutes. Okay, so now that's 10R for the day. So this one here was during Asia. This one here is during Frankfurt. And then let's just see if London will give us an opportunity as well. Okay, so this was that 15-minute zone. If we play price along a little bit more, we can see as we enter it, we've actually now swept the 15-minute supply. We just minimize it and we'll go back out to the 15-minute. Cool. So we've now swept this 15-minute supply. Okay. So it's now mitigated. So the next unmitigated supply is this one above. Now let's just have a look at our higher time frame at the moment. So even if we go all the way out to the 4-hour, what can we see? 4-hour here is bullish. We came into discount and we're looking to take out the 4-hour high. Keep that in the back of your mind. 15-minute is also bullish, okay? And order flow is still bullish. We haven't yet switched bearish within this leg. So order flow is still bullish, and therefore everything is now saying longs. 4 hours bullish, 15-minute structure is bullish, and 15-minute order flow is bullish. So if we go down to the 1 minute, we had this one here, which was inducement for the lower portion here, and we had this unmitigated extreme. Now there are certain rules which state exactly when you can still leave a limit on the extreme, as opposed to where you would need to look for an additional confirmation. What I mean by that is an additional confirmation would look like as price returns to this zone, you'd want to see another 1 minute change of character here before taking another long. However, I'm not going to get into the specifics of it, but this one here satisfies the rule that you would not need to wait for an additional confirmation at this level. So once we've swept this, okay, what do we know after a sweep occurs? Price usually trades in the opposite direction. Okay, we now have all of this as well as inducement for the lower zone. So we've built liquidity here, we've swept liquidity here, and price is returning to that unmitigated portion of the extreme. And again, let's have a look at this here. So the lowest point is 637. So -3 is 634. So we can have our stop loss at 634. And again, this is quite small. So if we do play it with a 2 pip stop loss, I would just push it up just to make sure that we do actually get tagged into the trade, and maybe just allow a couple of extra bips below for a bit more breathing room. So you can play this one here again with a 2 pip stop loss. Now we are targeting the next unmitigated supply, which is above here. And let's just see if we can actually just refine this again. So we have another beautifully engulfed 1 minute POI, which is also a flip. So we can be targeting this one here. Okay. You can be a bit more conservative and play just the open of it, right? It's more than sufficient number of pips. And again, this one here is 20 minutes into London. So London Open is at 7. This is at 7:20 p.m. And as you're about to see, we have another really great trade play out exactly as expected. And shout out to Liam for taking this one as well. So this one here, there we have secured 11.25R. And again, this was less than 2 hours. All right, 1 hour and 25 minutes. This one here was 31 minutes, another 5R. And this one here was 2 hours for an additional 5R. So 5R there, plus another 5R makes us 10, plus an additional 11. That's 21R in 1 day on one pair on all 3 sessions, right? So there was also a trade in New York, which ended up being a break even after taking 25% partial at 4R. But that's another reason why we only focus on AU. I truly do think it's the best pair to trade in Forex. And it gives you opportunities in every single market condition, or most market conditions, and every single session, whether it be Asia, London, or New York. So you can always tailor it around your circumstances and your schedule to make sure that you can still have a couple of hours a day where you go and onto the charts to make sure that you don't miss those setups. So this is here, just every one of these, I can't stress enough, is just 100% to the flowcharts that we've created. And all you need to do is adhere to those rules and remain systematic and mechanical, and you will be profitable in the long run. And that is a guarantee that I can give you. So if you do join the course, I am giving everyone 12 to 18 months to be consistently profitable and funded. And if you cannot achieve that, showing me that you have followed the flowcharts, I will happily refund you everything that you've paid. And I stand by my word on that. So if you are interested, there is a link in the description of this video to book in a free 15-minute consultation with me. I'll give you a quick run through of the course, as well as the Discord, and show you how it all works. We are trying to get 50 members by the end of the year, and we're currently on 42 or 43, which also gives you the opportunity to have more one-on-one time with me, as well as not being lost in the Discord. I know previously I've been in places where there's been 1,000 plus members in a Discord, and you just become another number. Whereas if you have a look at all of our Trustpilot reviews, which I'll also leave below, you can see that I'm very, very hands-on, and I truly make sure that everyone understands the concepts before moving along. And that's why we've created the quizzes and the assignments, and that's why we've structured the course in the way it has been structured. So if you do have any questions, please let me know. If you're not making 20 hours a day, then you need to join us, because we are. And I hope that you have a great rest of your weekend, and I look forward to speaking to you in next week's video.